And why are we focusing on alternative investments now? I think the first thing is it's a type of asset class that most benefits from the evolution that blockchain and AI is bringing us. There's a very low exposure for investors in alternative asset class here in Brazil. When we look worldwide, alternative investments roughly represent 20% of the industry assets under management, but it generates 50% of the investment industry revenues.
Hey everyone, welcome back to Brazil Crypto Report. I'm your host, Aaron Stanley, and today we've got a super interesting guest who's at the bleeding edge of tokenization and traditional markets in Brazil. I'm joined by Lucas Danicek, who's the founder and CEO of Nexa Finance, which is using tokenization to create hyper-personalized, customized investment products. Lucas, thanks for coming on the show.
Hi, Aaron. Thanks a lot for having me. It's a pleasure being here.
So to give us, to start off, just give us a TLDR on what is Nexa Finance? What are you guys trying to build?
Sure. So at Nexa, we're trying to rethink markets, offer combining high quality assets using our TradFi background with the best in technology, AI, and mostly blockchain to offer high quality assets in a completely new experience, which allows the investor to hyper customize and hyper personalize its investments in real time. So it's a great combination, a great new way to invest that we think we're proposing, we're offering.
I love that. And yeah, we're gonna be diving into that here over the course of this conversation. But to get started, I'd love for you to maybe introduce yourself a bit more. You've got a pretty interesting background, kind of in the Faria Lima world. You were an executive of various investment funds, family offices, before kind of going down the entrepreneurship path. Would love to give you, or love if you could give us some more color on your career trajectory, and then what was the inspiration to start Nexa? What was that light bulb moment for you?
Great. So my background is it's mostly focused on TradFi. So I've been working at hedge funds. I started my career quite earlier. So I was really young. I went to the university when I was 17. Started working on my second year on university on asset management firms here in Sao Paulo. And I had the chance to open my own hedge fund really young. I was 24 years old. I was working in an asset management company here in Brazil called Nest. I was trading a risk arbitrage and event-driven book. And after 2 years of good performance, we decided to spin off my strategy and start my own hedge fund. So that was in November 2010. Very niche strategy for Brazil, for emerging markets, risk arbitrage and event-driven. And it was quite successful. I joined the company as an intern, stayed there for 7 years, became one of the largest partners, was managing my hedge fund and a portion of our long-only equities fund focused in Brazil. It was a very good experience, learned a lot from the people who was to work there. And then in 2014, I left Nexa and took my hedge fund with me to Patria. So Patria Investments is the largest alternative asset firm in Latin America. And I joined the firm for 2 years. We merged my fund with Patria's fund. I became responsible for the multimercado, like the hedge fund area for Patria for 2 years. And then in 2015 to 2016, I joined Terra with a few other partners to build a new family office to manage Patria's founders' wealth. And it was a family office highly focused on direct investments and alternative investments, and investing for very sophisticated clients. So the company had few clients, 15 clients. Most of them had a capital markets background, or they were entrepreneurs that were still working and it's still building businesses. So we're a very good story. And overall, all these years working at TradFi, I think there's basically two main aspects from my career. On the first part, working as a hedge fund manager, focused risk arbitrage, was trying to find asymmetric opportunities where I had very low risk we were taking for very high returns adjusted to their risk. And I started using for the first time in my career technology for the risk arbitrage strategy. So the first experience that I was trying to join tech with TradFi was in 2010, where we built a little robot, very simple tech, but it would go inside the Brazilian SEC. It's called CVM, and it would just keep refreshing all the pages in the CVM and trying to show us any new filing. And we were able to actually get the information before it was announced on Bloomberg or any other news agency, and that got us. So it was tech providing us leverage and an edge to do better investments. And the second phase of my career, which was when I joined Nexa, the family office, I was there for 7 years. I was a partner and CIO, and I was much more focused on overall high quality investments on alternatives. So not focused anymore on risk arbitrage in event-driven opportunities. So I was still looking at these strategies, but allocating globally a portfolio, focusing on private equity, venture capital, private credit, and many other alternative strategies. And we're very successful. So we were able to deliver very high returns, so high teen returns in reais and in dollars over 7 years for our investors. And I think during these years, we experienced all the pain points that a wealth manager and an alternative investment investor faces. And these challenges and this background were the foundation for building Nexa. So the Nexa's foundation is overall a wrap up of these last 15 years, trying to do high quality investments, customized portfolios for high net worth clients, and do alternative investments, and leaving day-to-day problems that we faced on these strategies.
That's super interesting. So you've really been kind of at the forefront of not just alternative investments, but also kind of using technology as a lever to try to increase these asymmetric returns like you're discussing. And then maybe what was kind of that like inspiration where like, hey, we think we have, this isn't just an idea that we can deploy in our own fund necessarily or for our own clients, but this is something that we can perhaps like build an entire company around. We can try to make this stuff maybe more accessible to, folks who aren't just, high net worth individuals, perhaps.
Yeah, I think the vision was we were focusing on the last 7 years at the family office in basically managing billionaires' wealth and delivering very high quality returns with customized portfolios. And that was not scalable at all. We weren't able to raise money from clients with a low tickets, or like almost 99% of the population didn't have access to these qualities and these type of services. And the services we were providing, we thought they could be much better. Like to file a report, like consolidating all the clients' investments, it took like 1 or 2 weeks every month. So the month would end and it would take us 10, 15 days to deliver a report to our client saying what's his net worth, what was the performance last month, what was the performance attribution. And it's not a good experience at all. Like to have like 15 days for a billionaire to receive a balance sheet showing his net worth. I mean, is this really a high quality service we're providing? And we were doing an amazing job, I thought. But waiting 15 days was like something that it was a sense of the past. Like we weren't doing something that how the future of markets would be coming to. And when we see like the democratization aspect, like as a purpose of what we were doing, being able to democratize access to high quality investments and a high quality service experience, it's something that always called our attention and always made us rethink about what we were doing. And while we were last few years working and studying how blockchain was disrupting markets, we understood how we were in a transformation point of history, and how could blockchain rethink completely how capital markets work, and that we were able to access a technology that could allow us to democratize investments to everyone. And I really think like when we're looking at wealth disparity, usually people think a lot on your wage disparity, like you're being paid much more than someone else, and this is the main cause of disparity of wealth going forward. And I think there's a very important aspect, which is what's the quality of your investments? Are you able to actually access high quality investments for your wealth and be able to save your money on the long term during your life and be able to save money on good investments and retire and have a high quality life when you get old? And one of the main aspects of this disparity is accessing high quality investments in good terms. And overall, what we saw is almost no one has access to high quality investments in a good experience. So there's a bunch of barriers for alternative investments, and almost every barrier can be solved by tokenization. So high minimum investment amounts, like so blockchain it's reducing the cost of serving. Blockchain and AI, I think there are two major forces, and the combination of these two, the intersection of AI and blockchain, has a huge potential. But basically reducing cost of serving, so allowing to lower minimum investment amounts, fractionizing investments, uh, lowering geographical barriers. So Brazilian investor almost only invest in Brazilian assets. They have no access to global investments. And Brazil is historically a country that has been through a lot of cycles, good and bad cycles. So for someone to build up their wealth for retirement or for when they get old, it's important to have global exposure or exposure to different assets. Um, Programmability layer is something that we're looking into a lot. So how can we use blockchain to introduce programmability to capital markets? So you're going to be able to program a reinvestment automatically or a rebalancing of your portfolio and being able to have an adequate portfolio and an adequate asset allocation over time and program that so that you don't need to count on a specific advisor or a human error or your ability to be able to track your portfolio and have this job being done by yourself. Um, so I think there's many reasons. I mean, like liquidity in the secondary market, being able to trade 24/7, not waiting 2 days like in Brazil here, our stock exchange. It gets like 2 days to actually liquidate a position you're buying or selling. So the overall experience, when you look at liquidity, cost of serving, fractionizing 24/7, be able to access global investments for everyone, it's going to change a lot the way we currently see the market.
Yeah, it's a huge potential, right? And I know Larry Fink just put out a report, or his like annual letter to shareholders. He was talking about kind of the virtues of tokenization and how he thinks that tokenization is going to really like revolutionize capital markets. And like some of these aren't necessarily like new points. He's been kind of banging this drum for a little bit of time now, but it kind of feels like, you know, you and him are kind of like singing the same song here. Not to like compare you overly to Larry Fink, you know, I mean, it's a good league to be in, but perhaps you're not quite at that level. But like, I mean, I think it's definitely like a validation that like, hey, like we're on the right track here. If Larry Fink is kind of, you know, like promoting the same thesis that we're promoting, right?
Yes, I think it's amazing. So BlackRock is the largest asset management firm in the world, and to have like the one of the main entrepreneurs and investors ever to be vocally and actually believing and investing in tokenization of real assets, it's just amazing. And I think tokenization has been on the news, and we have been going through hype cycles on tokenization for a few years. But I really believe we are in a turning point of adoption, and we're probably going to have like our iPhone moment really soon. So, like what Larry Fink letter, it's actually stating, it's super aligned with what Nexa we're proposing. So, so Larry Fink is actually advising like you should have more exposure to alternative investments. One of the points he mentions in his letter is instead of having the traditional 60-40 portfolio, people should begin to have a 50-30-20 portfolio, which is 50-30 on equities and bonds and 20 in alternatives. BlackRock bought alternative investment asset management firm, which is GIP, focused on infrastructure. And he's stating that there is a $68 trillion opportunity to invest in infrastructure worldwide. Today, only there's a lot of exposure to cash instruments worldwide. If you look only into the US today, there's $25 trillion in cash balance or money markets funds invested in the US. And so there's a huge opportunity to expand exposure to alternative investments and how tokenization can unlock that. And BlackRock, it's going on that direction. Like it's seeing that what ETF, how ETF changed the market in the last 10, 20 years. That's going to be tokenization for the next 10, 20 years. It's going to change the market. And we're going to be able to tokenize anything. Tokenize stocks, tokenize bonds, tokenize real estate, tokenize infrastructure, tokenize private credit. And that's really going to change how market works. We're going to be able to rethink markets, democratize access to these investments worldwide. And it's a very, I think we're in a very relevant point in time, like a really turning point in history, where tokenization and AI are going to transform capital markets. And this parallel between ETFs and tokens is something that we have been using at Nexa as a concept here. So on our platform, our investor, our client, he's able to customize and personalize an investment in real time. And the token we're delivering to these investors, it's very similar to a private ETF, like an ETF like for private markets. So when our investor wants to invest in a private credit instrument, and he can decide what's the asset class he wants to invest, what type of risk he wants to incur, what type of term and duration of the investment he wants, what cash flow structure he wants to have, what type of benchmark. So now we're offering investments in dollars, investments in reais. Your investment could be inflation linked, prefix on a floating rate. And what we actually delivering, it's a token portfolio, which is a blend, a basket of many private credit investments, for example, in the fixed income environment, where we're combining, for example, credit card receivable, private credit, CLO debt, portions and fractions of all these assets to deliver this return. So it's very similar to what an ETF, how is it structured? It's a portfolio, but on-chain with all the benefits of being on-chain and being able to provide any asset class. Like we could combine equities, real estate, infrastructure, debt, and all in the same instrument, in the same token, in the same technology layer. So it's a huge evolution for markets, and I really think in the next 5 to 10 years we're going to see most of the market being tokenized.
Yeah, no, this is super interesting, and as you're describing that, I can't help thinking of I think the first time somebody was like describing the idea of a 3D printing to me, like 10 years ago or 15 years ago, where it's like, okay, instead of you going to the store and you pick out such and such product that you want to buy, like there's like a set sort of inventory of products that they have available. But yeah, kind of as you're discussing this, I'm thinking of almost like a 3D printing on demand economy, right? Where instead of maybe going to the shoe store, shoes is a good example of this. Like instead of going to the shoe store and just trying on shoes until I find the right one, it's like, okay, no, I'm just gonna tell the company or the printer like what I want, like what my shoe size is, what I want to look like, and it just like 3D prints a shoe for me or something. I mean, I don't think we're quite there yet. It might be a few years off, but it's kind of the same idea of like we're moving toward just a very hyper personalized, hyper customized economy, right? And to your point about kind of the AI integration, maybe not to like jump overly on the AI bandwagon here, but I think that's part of the value that AI provides here is that the AI can just know a lot of these things about you. It can know your financial situation. It can know where you live. It can know what your risk profile is, et cetera. And it can automatically rebalance this portfolio for you as well, based on it can suggest portfolio, then like rebalance it. seems like there's a lot of like really interesting overlap here. And it seems like the world's definitely heading in this direction where like this level of like hyper personalization and hyper customization is going to be a thing across like all sectors, but like specifically in the form of investments. Cause it, it doesn't really make a whole lot of sense, especially for an average person. Like, I was just thinking of when I was selecting my, my retirement fund allocations, they just give me a list of like, okay, here's like 10 different funds you could select from, and it's like, oh, do I want like emerging market growth or do I want, like US bonds or something, like you just kind of pick one or the other. And then you just sort of trust that the fund manager is going to deliver something good for you. It's kind of, it's sort of a set it and
no
forget it thing.
transparency.
Yeah. Like I have
no transparency. One shoe fits all. It's for everyone. Like it's not considering who you are as a person, your values, your long-term goals, how your life is structured. So it's a one shoe fits all. And I think there's a generation, as you said, it's a generational trend of hyper personalizing and hyper customizing everything we do, like mobility, how we order food, how we watch movies at Netflix. So it's actually personalization of experiences and products. It's a generational trend that it's covering all aspects in our life, and it's still lacking a lot on the investment side, which is a very relevant service and product that everyone consumes, and it's very relevant for their lives. And today, you have a standard shelf of products in every bank or every platform, which are the same products for everyone. And it's when you experience, the first day that we were actually able to hyper customize and personalize a product in real time at Nexa, it was one of those mind-blowing moments where when the first time you experience something that is personalized for yourself and you remember the way you used to do that in the past, it's just insane. It's like entering a Blockbuster store and trying to pick your movie or watching Netflix. And once you try for the first time watching a movie on Netflix and how the algorithm suggests a new movie for you, or how Spotify tracks to your interests and suggests new music, it's such a better experience that you never want to come back. And on the financial industry, we have been comparing that experience to digitalization of banks. So 15 years ago, when Nubank, for example, in Brazil, was starting to grow and starting to get clients, the first reaction was, oh, but where am I going to call? There's no a specific branch that I could walk in and talk to my manager. So there was huge doubts on the experience. But once you try the experience of being a Nubank client or any other digital bank, the experience is so much better for the client that every bank became a digital bank. Like when XP or the great big investment platforms here in Brazil, they introduced an open platform structure to the market. Before that, you just went into your bank and you had 3, 4, 5 products you could invest. They were all managed by your bank. And when you experience the open platform, it's so much better for the client that all the market switched to become an open platform. And we really believe this is going to happen for personalization and customization for products. So just walking to a platform and trying to decide which is the best product for you, and the same products are available for me, for you, for the Uber I got today in the morning, for my grandmother. Everyone is accessing the same products despite of your age, your risk profile, your interests, your value, how your life is structured. And it's easy to understand that that's not the best way to do things. And the personalization of experience and product offering, it's a trend that it's already happening in banks. So banks are trying to use AI, machine learning, and to try to decide what product they should offer you. Should I offer you an investment? Should I offer you a mortgage? Should I offer you a credit card? So technology and data is being used to try to decide which product the bank should offer you. And we are building the solution, whereas when we offer a product for our client, which is an investment, what is the investment that we should offer for this client? The one that maximizes how happy the client is, it's more suited to his life, for his risk profile, for the return he wants. And it's a much better experience. And once you try, you never want to go back.
I love that way of differentiating maybe what these big guys are doing versus what you're doing, where they're using the technology, they're using the AI and the machine learning to try to figure out what products to sell you. You're trying to use these technologies to actually build the product for the customer. That's like a totally different thing, right? You're actually using a tech to create the product, a very customized product, not just trying to trying to figure out like, okay, what product are they more likely to buy, right? Like you're actually creating a specific product for the end user, which is super interesting.
Yeah, that's it. And it's inverting a push model, which is, the big institutions pushing products downstream and building the product from the client. So it's a client-centric approach. Like, so personalization is always putting the client in first place and building everything for the client. So I think it's really aligned with how society is evolving and what actually like the financial industry it's going forward.
So I want to talk more about the solution you guys have built here and how it all works. But before we get into that, I want to just ask quickly, there's a couple kind of like gringo questions here for folks who, we have a lot of folks from outside Brazil who watch this and may not be like super familiar with some of the intricacies of the market where you're operating in. But when we're talking about alternative investments in Brazil, like what exactly are we referring to? Like, I mean, it kind of has a different, meaning, I guess, depending on which jurisdiction you're in or which market you're operating in. But like, what exactly are you referring to when you're looking at, we're talking about alternative investments in this case?
Cool. So it's we're focusing a lot of private credit now, private and structured credit. So that could be, instead of buying a time deposit, or in Brazil a CDB from a big bank, you could just buy a credit card receivable, and the credit card bank that issued that card, it's Itaú or it's Bradesco, it's a large institution, and no one has ever bought like a credit card receivable as an investment here, like an actual individual. So it's being able to access unstructured, complex, illiquid investments. And a big part of what we're doing is taking this complexity and providing a seamless experience to our investors. So our job is to source these high quality assets and show to our client, do you want to invest in an Itaú credit risk? You can trust my process, my investment process, which has been proven for the last 15 years. And I'm going to offer you exposure to Itaú credit risk through a credit card receivable. I'm going to offer you exposure to Brazilian sovereign risk through a public payroll credit instrument that the paying institution is the federal government. So we have been focusing a lot on private credit. And the next step is expand to infrastructure, real estate, private equity, venture capital, secondaries. So we want to be able to cover the whole aspects of alternative investments. And why are we focusing on alternative investments now? I think the first thing is it's a type of asset class that most benefits from the evolution that blockchain and AI is bringing us. There's a very low exposure for investors in alternative asset class here in Brazil. When we look worldwide, alternative investments roughly represent 20% of the industry assets under management, but it generates 50%, 50% of the investment industry revenues. So it's actually, we're getting from this complexity and illiquidity much better returns, much better adjusted risk return for our clients. And in the future, we want to cover everything, traditional and alternative investments, because everything is going to be tokenized, and the client will have a complete experience to be able to have 100% of their assets on chain with real-time reporting, liquidity, 24/7, and all the benefits. But we're starting with alternatives because we believe they offer high returns. They have been very low offering of high quality alternative products for investors. And we're able to use the technology to reduce the complexity and offer these investments to our clients.
And is the reason that these alternative investments have not been widely available in Brazil and perhaps, other markets as well, but we'll focus on Brazil here. Is the reason for this, is this like has it have to do with like qualified investor rules or accredited investor rules? Or is this more of a case of there's just not enough liquidity, there's not enough incentive for these products to be like offered to, your average like middle class or like upper middle class investor? Like what's maybe the barrier there preventing folks from accessing these under the kind of the current system?
Cool. I think one of the limitations when you look at the product is like private equity products are usually very long-term investment decisions. Like you take a 10-year, 12-year investment decision. That's really hard on an individual to decide such a long term. There's no transparency, so usually it's a black box. You just give an open mandate to an asset management firm that's going to buy something for you, and you're going to keep that money there for 10, 12 years. And there's no liquidity, so you cannot regret that decision. So there's a lot of product limitation. And when you look at the high minimum amounts, like probably most of the investors, they would be willing to invest in a private equity fund, a venture capital fund, an infrastructure deal, if they could sell in the secondary market, or if they could diversify their alternative investment. So if instead of having like $1 million, $10 million minimum investment amount, if I had like $100 minimum investment amount, I would be willing to build an alternative investment portfolio that I could diversify. I wouldn't be exposed to one specific fund that has a high minimum investment amount. I would have transparency on what I would be investing, and I could trade on the secondary market. Like I could see what is not adequate anymore, or what investment is not aligned with my view of return or my themes of interest or my values, and I could just sell in the secondary market. The market would be much larger than it is. So I think these limitations have been avoiding the alternative investment industry here to develop. Like the qualified investing restrictions, we are still subject to that restrictions on the way we're doing business here at Nexa. So we have been trying to offer tokens to our clients using the same regulatory frameworks of traditional investors. So our clients are multifamily offices, RAs, advisors, private banks, asset management firms. And for these clients, they don't want to get a regulatory risk, bring a regulatory risk for their businesses. So we're trying to use the same framework on the regulatory standpoint to offer the products on a much better experience, much better customized, and providing better access, but not trying to completely disrupt the regulation.
So then your focus is for this product, at least in the early stages, is primarily on the qualified investor client base, and then the idea is that eventually this can be rolled out to like anybody. Essentially, is that the idea? But you're focusing on the accredited investor base initially.
We can offer products for both qualified and unqualified investors. The difference is the type of product. So a few type of products, they are going to be access to qualified investors. For example, if we tokenize a fund, like for tokenizing a fund, doesn't make the fund available for non-accredited investors because you tokenize. Like it would be like stretching regulation and would bring a risk for us and for our clients. So we're actually seeing what's the underlying asset. Is this an accredited fund we're tokenizing? So we have to sell this fund for accredited investors. Is the underlying asset that we're tokenizing an asset that could be assets for any investors? And technology is bridging this access, but we're not flexibility regulation. So I think that's our mindset now, like not trying to avoid the regulation, but use the same regulation, looking at the underlying asset.
Yeah. So basically, you'd assess the customer profile, like, okay, is this person qualified? Is this person non-qualified? And then, the types of, the way you construct this person's portfolio is basically, if they're qualified, you construct it one way. If they're unqualified, then you construct it another way. But do you see like tokenization as potentially like the solution, like a technology-driven solution to some of these investor or like these qualified investor provisions that we have in Brazil and in the US, where like the idea behind these is like, well, we want to protect, quote unquote, uneducated, unqualified investors from overly risky investments and opportunities. But while you're protecting them on one hand, you're also preventing them from accessing some of the highest yielding products, right? So there's kind of this paradox, like you were mentioning earlier, like a lot of these the highest yielding products tend to be these kind of exclusive alternative investments. And I'm just wondering here if does this concept of tokenization that you guys are building, or these products that use tokenization that you guys are trying to build out, can this potentially be like a remedy for this? That's I don't know. I would love your thoughts on that.
I think so. Yeah, I think so. I think we have to challenge like these restrictions. They don't make any sense. Like to patronizing someone and say you cannot invest in that because you're not qualified to that. I think as a libertarian standpoint, it makes no sense like to actually restrict someone to being able to invest the money and the wealth he generated by his own work on whatever he was willing to invest. So I think that doesn't make any sense, and I think blockchain and tokenization overall is going to challenge that model. And when we're able to offer personalized investments, the investment is going to be built suited for this client. So the argument is that this person is not, this individual is not ready to invest, and this investment is not suited for him. It's not going to make any sense. So I think this is going to change, and this is going to help democratize investments. And one of the aspects, one thing we talk a lot here at Nexa is what we're doing. Actually, we're not offering a product to our client. The client is demanding a product. So it's a whole different way to interact with an investment. So instead of offering a product and say, hey, buy this product that I'm selling you, this return, this type of risk, and this duration, we're just asking the client, so give me your data, or ask what you want. Like, you're going to say how much you want to invest, what type of risk you want to get, what type of return, what type of benchmark, and the type of cash flow you want. And we build the product responding to a demand that the client gave us. So it's a completely different way of doing business, and it's much better for the client. And there's actually no, I mean, we're using the same regulation from the whole regulation structure that we have been using for many, many years. But it's a different way of doing business. I don't think the regulation is going to apply for this new way of doing business. We're not offering anything. We're offering a service of customizing, personalizing high quality assets to our client. And it's one individual offering. So on the end, when you look, we're doing a private offering on any token we're issuing. So we're doing a token only for you. It cannot be more private than an individual offering, which is perfectly suited for this individual. So I think this is going to force a completely change in mindset and a complete change in regulation when these restrictions of accredited or non-accredited investments make no sense at all going forward.
And I really like this because, I mean, this is an issue that's been litigated in the crypto world for years now, right? This whole idea of like, oh, like who can invest in these tokens, who gets early access to these tokens, right? I mean, this is, at least in the US, this has been something that's been litigated since the ICO era way back in the day. And there's always this argument of like, oh, well, these people aren't sophisticated enough to understand what they're investing in. And then people are like, on the other side, people are like, well, if you let me buy you're letting me buy like lottery tickets and go to casinos, but you're not going to let me invest in something that might actually like generate value. And it's just like this back and forth, right? And on one hand, you see like, okay, like a lot of, venture capital investing, like angel investing is like, this stuff is like super, like there's like a 99% chance you're probably gonna lose your money, right? Like this is like, that's just kind of how the math works, right? If you're investing in ICOs, like, yeah, there's probably, a pretty good chance you're gonna lose your money, right? There's also a chance it might bomba, like it might go to the moon. You might get some outsized return there. But so it's like we've had this like endless litigation of like, oh, these rules aren't fair, but it's just kind of back and forth, right? But what you're proposing is like is a technological solution to this, which I find really interesting because like the debate isn't going anywhere. It's not going away. It's not being resolved anytime soon. Like no side's going to win out in that. But like you're proposing a technological solution to this that will, you're protecting the investor because you're not even necessarily protecting the investor. You're just like giving them like something that's like perfectly suited to their individual needs at that point in time, right? To their risk based on their risk profile. So so the investor doesn't even necessarily know, like, maybe it depends how much they want to take an active sort of management role in this, but like they wouldn't necessarily know, like, oh, I have as part of my private, my personalized, ETF, essentially my personalized fund, there's, some credit card receivable risk here. There's some private equity risk. There's some venture capital risk. Like they wouldn't necessarily need to know like all these fine details unless they really want to, right? But you're just basically delivering them something that's like based on your risk profile and your objectives. Like this is sort of the tailor-made investment product for you.
No, definitely. One of the beauties, just adding to your thought, like one of the beauties of blockchain and being able to put on a smart contract all these rules that what suits you and what investments you should be able to invest, or what investments should be suited for you. We're coming out from regulation, compliance, and governance being handled by people, institutions, and laws, and being able to code that. So it's a much better way to structure things. Like if you actually put on a smart contract that you cannot, for example, you don't want your money to be invested in whatever type of sector, whatever type of things you're not interested in, or they're not connected to your values, you can put this restriction and it will be enforced by a smart contract instead of being enforced by someone or by a regulation that it can be overcome. The smart contract is much better enforcement for any rule you want to apply. So it's much better to actually provide a well-suited investments from someone when the rules are being tracked and controlled by a smart contract instead of someone or some institution.
Yeah, exactly. And I think the these qualified investor rules, they're definitely kind of a holdover from the analog age, right? Where it's just a very blunt tool. Like in the I don't know what it is in Brazil exactly, but in the US, it's like, okay, if you have a net worth of $1 million or up, you're a qualified investor. I think not including your house, like your house doesn't count if you're toward that $1 million. But if it's less than $1 million, like you're not a qualified investor. It's just a blunt sort of limit right there, right? Irrespective of like what my knowledge of, I mean, I could spend all day studying this stuff, but not have $1 million, but I'm still not a qualified investor. I could inherit a bunch of money and know nothing about finance, but I'm a qualified investor, like it doesn't make any sense.
It doesn't make any sense.
Right. Like I could have no idea about any of this stuff, but like I'm still a qualified investor. But anyway, I mean, thank you for that. That's super interesting. And that's one of the things I really find interesting about this project that you're building is like, trying to find, I mean, one of the reasons I get excited about crypto and these technologies is like this idea that we're not just trying to, like, we're trying to take down the banks or we're trying to, take down the government. It's not this like anarchy type thing, but it's like, look, we're trying to find just technological solutions to these problems that we just haven't been able to find solutions. Like we have imperfect solutions that have been kind of copy and pasted over from the analog era. And just because we had no other real alternative. With these technologies now, like we have the ability to really create new novel technological solutions to these problems that actually like address the core problem, right? So it's really inspiring what you're building on this front. And I'm really like excited to be kind of talking to you in these early stages of this, because I feel like this is like you're hovering over the target here. So
we're super excited here. And then this vision, I think, evolved over the last 1 year and a half. Like in the beginning, we're probably looking at the low-hanging fruit, like the obvious benefits from tokenization and AI. And since when we started building the company, we understood that we could use for a much better purpose and highly improved experience like customization, personalization, and programmability. They weren't our first pick on the list like 1.5 years ago, but we understood using the technology that we could extract that and offer a much better experience. So it's a vision that evolved during the last few years.
Amazing. And then just to wrap things up here, I would love to get the download from you on just some roadmap questions. So as far as like product roadmap, like where are you guys at? Like what are you guys looking at for the rest of the year? As far as like fundraising, like what's that situation like? Have you guys already raised? Are you raising? Like what's going on with that? And then, when should folks be able to, depending on what their status is, I guess, like when can folks like expect to be able to use this product?
Cool. So our platform, starting from the end, like our platform now, we're allowing beta users to have access on private offerings. So we have a very restricted number of clients that are actually helping us build a better experience, giving feedbacks, and then we have been bringing in clients on batches and trying to control the inflow of clients, control the experience. We're going to launch our B2B version of our platform in May 1st. So we're a few weeks from there. We're an asset management firm, an RA, multifamily office, or a private bank. They're going to be able to build products for their clients in real time, customized, personalized for one or for multiple clients, and manage their client base on our platform. So we're really excited with this launch coming soon. We have tokenized around 65 assets, 65 tokens we issued this year. 6 of them redeem in full the investment to the clients. The performance was quite good. So we delivered an annualized IRR of 18.4% in reais for our clients. This is 6.4% above CDI, which was our interest rate benchmark here. So very good returns for banking risk. So it was AAA banking risk like Itaú, Bradesco, Porto Seguro, Banco do Brasil. These very large institutions and very safe investments with returns that are insane for this type of risk. So we're very excited, like in developing new strategies. We offered 4 different type of risks on our tokens in the first issuance, and now we're expanding how our client can compose and create their token. So now I think we have we're looking at the network effect on our platform here, which is the more clients we have, we're able to generate more assets because we have more demand, and the more products and strategies we're able to source, the better the product we deliver to our client. So there's a network effect, which is the more we have demand, the more we can offer a better product. The better product we have more demand. So we're really excited how things are going. We started the company a little over a year ago. We started the company bootstrap. So my partner, my co-founder is Eduardo. We have been working together for 10 years already. It's a long journey. Great guy, very intelligent partner. Great to have him. We have 9 partners overall at Terra now. So very, very highly qualified and experienced partners we're happy to have. We started the company bootstrap, so we put money from our own pocket in the beginning. We raised a small pre-seed round mid last year, beginning of second half. We raised from Norte Ventures, which is a Brazilian early stage VC fund, best connected fund in the Brazilian tech ecosystem, in our views. A few scouts from A16Z, and some amazing C-level angel investors. So we got like 10 tech founders, 10 wealth managers or distribution CIOs or CEOs, and 10 C-level partners from alternative investment asset management firms or ecosystem. We plan to raise a new round this year, probably soon. We passed this last year building the technology, the team, the culture, and actually trying to decide what would be our focus. And now it's very clear for us the opportunity we're chasing. And I think it's a great moment to grow faster, bring more people, invest more money in the company, and be able to transform the market. And I think we have a huge opportunity in our hands. So we're probably going to raise money soon, trying to get the best partners, not only for the amount they invest, but who can add value and help us build a great company, a great environment, and help Nexa be a reference and the benchmark of tokenization industry in Brazil and Latin America for the coming years. So very excited, building new products, bringing new clients, launching the B2B platform in a few weeks, and probably raising a new round in the next few weeks or months.
Well, that's amazing. Yeah, and best of luck to you on all those endeavors. It sounds like you've got your plate full with work, but like I think you guys are headed in the right direction, which is awesome. And just one other thing, actually, before I forget, when you guys came out of stealth back a few months ago, you released this tokenization report, the Brazil Tokenization Report, which was quite well done, and it was probably the most thorough look at kind of the Brazil tokenization ecosystem. For those of you on audio only, he's holding up a physical copy of the report. So, but maybe just tell us a bit about like why'd you guys decide to do this? Like, what's in the report? What's kind of the vision for it? And then we'll wrap it up here.
Cool. So when we started to study tokenization industry in Brazil, it was really hard to find data and to actually understand the industry. What were the volumes being tokenized in Brazil? What was the use cases? How was regulation? How developed the industry was? And the more we studied and the more we knew about the industry, more impressed we were. So probably like 2-3 years ago, if you asked me 3 years ago, like, how is the tokenization industry in Brazil? It was like, is there a tokenization industry in Brazil yet? There's probably just good products, but is there something really going on? And I think we believe we're very well informed investors and entrepreneurs, and we weren't well informed about the tokenization industry in Brazil. And I think that caught us our attention. We're like, probably there's a lot of very intelligent, very well informed people in Brazil and worldwide that have no clue of how developed the tokenization industry in Brazil is. And I think the idea to build this report, so it's a 65-page report. We issued last year in the end of last year. It's going to be an annual report we're going to file. So this year in October, November, we're going to release the new version of the report with more data, more use cases, more interesting people showing how developed the industry is. And it's actually our contribution to the ecosystem. I think there's a lot of great initiatives. Brazil Crypto Report it's a great one to that. Now I'm happy to be here, and I think it's a great contribution to the ecosystem and helping inform what's going on in Brazil with the crypto and tokenization industry. And this is our contribution, like to be able to help drive adoption and develop more the industry. We have to spread out information, make information available to everyone, transparent, democratic. All the values that are driving us in our business is driving us on the idea of the report. So we want to help drive the industry. I think there's space for everyone. There are many use cases that people can build around tokenization industry in Brazil. And the more we have like good people, intelligent and honest people building products on blockchain, products and projects on blockchain here in Brazil, the more the industry is going to develop. So we want to help this industry to develop. I think we have a very good opportunity here. We have a regulation and a central bank which is really pro-regulation and is helping drive tokenization adoption in Brazil through tracks and through regulatory sandbox projects. And I think the report goes in that direction. Like, let's try to help this industry develop, help new projects to develop, and this helps us in our pitch when we want to raise equity. It's going to help probably other entrepreneurs to raise money and help prove how developed the industry here in Brazil and what's the potential of the market. And I think Brazil can become a relevant country in tokenization. I think we have a great opportunity to at least in this aspect to be relevant worldwide and be one of the leaders to disrupt this market. So happy to have anyone downloading the report. So if anyone wants to just log in BrazilTokenizationReport.com, the report is free. Everyone can download and read the report. The more people read, the better. And I hope we're able to improve the report going forward and actually contribute to the whole development of this industry.
Yeah, no, thank you so much for putting that out and all the work that goes into that. That's definitely a service to the ecosystem, and it's in Portuguese and English too. So if yeah. I think it's for Brazilians, but it's also for the rest of the world to understand what's going on here. So yeah, appreciate the work that you put into that. Definitely a value add to the ecosystem. And then we'll include links to that as well in the various show notes here for folks to download. Anyway, Lucas, really appreciate your time. Appreciate you coming on the show. Really inspiring work you guys are doing. I mean, this is, I mean, not to like sound overly flattering here, but like when I first discovered the vision for what you guys are doing, it's like, wow, like this is like this is like a tokenization use case that like really makes sense. Like I see like the disruptive potential of this. And I'm like, this is something that I would like sign up for in a heartbeat, right? if I had the chance to, right? Like, or once it's available, I will definitely be like signing up for it. And I'm really excited to see just like how you guys progress, how you guys are able to like move this forward over the coming months and years, and just wishing you the best of luck and success over the coming months. And then how can folks find you if they want to get in touch or learn more?
Great. Well, first of all, thanks a lot. I think really means hearing that you think our project is it's super interesting, and we're really excited. We have been working many hours a day, many days a week, and I think we have a huge way to go. We have to work a lot to actually deliver everything we're going to offer to our clients, and we're really excited what we have ahead. If anyone wants to reach me, I'm happy to talk to anyone. My LinkedIn is Lucas Danicek. You can find me on LinkedIn. Nexa website is nexafinance.com.br. The report I already mentioned. Happy to chat with anyone interested in knowing more about Nexa or interested in helping developing the industry here in Brazil. We have to join forces and make it happen. And we're super excited and super open to make that happen. So thanks a lot for the talk here. It was amazing. Great talking with you. And I'm a listener to every podcast you guys deliver, and
Amazing.
really love it. Great content. So hope you guys like our talk today, and I'll keep listening to every post you guys make.
Amazing. Well, thank you. I appreciate the kind words. Well, thanks again, Lucas. Appreciate your time. And thanks everyone for watching. We'll see you next time on Brazil Crypto Report.